Now, US banks and credit card companies have won an important legislative victory. The Senate has passed a bill overriding regulations that would have allowed consumers to file group lawsuits against financial institutions. US banks have long included clauses in their contracts to prevent their customers from joining together and launching so-called class action lawsuits. In July, the US Consumer Financial Protection Bureau released proposals to prevent banks from imposing such conditions on their customers. The Bureau was created to help regulate banks more tightly after the 2008 financial crisis. But financial companies fought back, and on Monday, the Treasury Department also criticized the Bureau's proposals. It said the legal costs of allowing class action suits would most likely be passed on to consumers, pushing borrowing costs higher. And on Tuesday, the US Senate narrowly approved the bill to block group lawsuits. TRT World's editor-at-large, Craig Copetas, joins us now from Paris. Craig, welcome, as always. Now, look, the GOP's main argument here is that class action lawsuits are going to push up the costs of borrowing for the likes of you and me. How valid is that argument?
Deregulation ain't cheap. They did a study in which the government did a study in which they estimated it would cost financial firms some $500 million in legal fees over the next 5 years, $330 million in payouts to plaintiffs' lawyers, and a whopping $1.7 billion in settlements. And the financial world didn't want to go there. That ingredient, by the way, was added to because large banks, as of 2009, have paid out over $1 billion to customers who got hit with felonious overdraft charges. So, and the government and the Republicans have been pushing an end to this Consumer Financial Protection Bureau for quite a long time. It was supposed to come into effect in 2019. And what it does, it allows you to sue. And what this other study discovered, which is interesting, is that once you block an individual from suing, they don't go to arbitration because that's the other option, the only other option you have. According to the study, it said that people just don't want to go to arbitration because in arbitration, they mostly lose.
Ah, well, so the Republicans kind of have a point here, don't they? I mean, who wants to put more money in the coffers of corporate lawyers, for crying out loud?
Well, look, that's the big complaint, but I think it's more of a red herring. If you look at this situation, this prevents individuals from banding together or individuals on their own from going after the fine print that in contracts that often hurts consumers. That is a right. Now, it's very true that it costs money, but at what cost? Now, class action lawsuits over the past 20 years have been the trendiest American export because these kinds of things don't actually exist abroad. Today, we have about 21 of the 25 largest economies in the world have some sort of class action lawsuit capability, including Turkey. Now, these class action lawsuit bills, if you want to call them that, or ability to do that, have been for the past 15 years vigorously protested by U.S. chambers of commerce around the world. And they're still doing this. They're still trying to get various countries to pull these laws out of the books in the various nations they exist. And what the Senate did is going to help them do that.
Craig, so this latest Senate bill that we saw being passed is just the latest in a whole series of repeals of the Dodd-Frank reforms that came about after the financial crisis. What other bank regulations could we see also falling by the wayside?
Well, there's a major swerve here. I think you're going to probably see a lot of bank regulations falling. Again, when you come to bank regulations, how much money must a bank actually hold in its vault to actually be a bank? That could well come down. You're going to see further attempts by the government to prevent litigation against banks, even by consumers or groups. I think that it's all about it's all about the money. There's one word here that really kind of covers it as it's liability. There's a working formula in the U.S. that for every $1,000 of revenue that a company or a bank makes, they have to spend close to $2 on liability. Now, you extrapolate that out for hundreds of billions of dollars, and that's serious money. And from what I'm being told, they're trying to get that liability spend down. And you know who gets hurt when that liability spend comes down? It's the consumer.
As always, Craig Copetas in Paris, thank you so much.